Yo, what's going on, guys? My name is Vince and welcome back to my channel. Now, if this is your first time here, first off, I want to say welcome. I make stock trading, option trading, as well as financial education videos. So if you guys want to learn a little bit more about the stock market, stay in tune with some of my trades, go ahead and consider subscribing to the channel. So before diving into the topic of today's video, I want to go ahead and pass along some appreciation to you guys for the most recent support on the channel. So popping up the stats right here, 284 subscribers, up 144 subscribers just in the last 28 days. 11.4 thousand watch time minutes and 2.4 thousand views. So some really awesome growth going on in the channel right now. In the most recent video, that one performed the best, 1,435 views. And the most awesome stat is the 54 comments. That shows me that you guys, want to interact with me. So if you guys have any questions, feel free to ask down in the comment section below. Overall, guys, I'm just here to share my investing journey and hopefully along the way provide some value, education, as well as inspire some of you guys out there watching to start investing for your future. $1 today is worth more than $1 tomorrow, which basically means that there's no better time to start investing than now. So jumping back on track, in today's video, guys, I'll go ahead and recap my trading performance from the prior week during one of the most volatile stock market periods, still coming out over $5,000, trading puts on the S&P 500 ETF, as well as on Royal Caribbean. We're gonna get a little bit more technical in today's video. I'm gonna pull up the charts, show you guys the trades, walk you through the psychology of the trades, as well as the technical analysis that I'm using to come out on top during these volatile times in the market. So first things first, let's go ahead and pop up the Robinhood portfolio up on the screen. $33,645, up $30,150 in the last few months. In the last week, $5,386, and this is where I was trading the S&P 500 ETF as well as Royal Caribbean. So if this is your first time here, guys, I started with just over $3,000 on January 31st, and now today, $33,645 trading options during this volatile market period. Scrolling down on the portfolio, you can see that I'm not holding any positions. Right now, with the volatility in the market and the headline risk, I don't feel comfortable holding options overnight or even during into the weekend. Anything that comes out over the weekend, any crazy news that comes out, could potentially make my positions worthless overnight, and that's not a risk that I'm willing to take. So if there's one piece of advice that you take away from today's video, is that holding option contracts overnight or even over weekends during a volatile market like we're seeing today could be extremely risky. You could have those options become worthless overnight. Now, traditionally, this may work for you, and I'm sure it's worked for you in the past, but when we're seeing, 1,000-point moves to the upside or downside in the futures markets overnight, you could watch your options go basically worthless without being able to do anything about it. So if you're in the money, if you're profitable, or even if you have a small loss, think about it twice. It may be worth taking that profit or cutting that loss before holding these options overnight. All right, guys, so I shared with you my trading performance over the last week as well as over the last few months. Now I want to dive into the charts, go over my trades on the S&P 500 ETF, as well as on Royal Caribbean. There were some technical factors that I was watching that made these trades relatively easy to spot. So I want to share that with you, and hopefully you can find some value and implement it into your trading strategy. All right, guys, so diving into the charts here, what I have up on the screen here is the S&P 500 ETF, the SPY. The dark gray areas that you see, that's after hours trading. This darker area here, that's Thursday, and then over here is Friday. The green vertical bars that you see are my entries on some of the options contracts that I took, and the red are the exits that I had. Now, finally, this gray line that's running through the charts, that's the VWAP. I'll pull up a definition for you guys. If you've traded with this, that's great. If not, here's some info for you. This is the volume-weighted average price. Now, there's one thing that really sticks out to me, which is right here, which is exactly what I did last Thursday. So some short-term traders like to wait for one side to lose the battle and to either go long on a break above the VWAP, so if the price breaks above it, or go short if the price breaks below it. Now, I was using this last week as a way to sort of signal where the market was going, and if it was to break below, I would start to scale into some put options. So I'll show you guys an example of exactly how the price broke below this VWAP line and then continued to sell off after that. So if we zoom into Thursday, which is right here, what I first want to go over is the morning, which starts out right here. So this is 9:30. This is the beginning of the market. So as we saw, the market started to uptrend during the morning. Now we can see that because if we draw a trend line of the price, we can see that it was making higher lows and higher highs. So the market was uptrending. Now what I was doing was I was waiting for this uptrend to break. And what I saw was right around 11:40 a.m., the trend did break. Now what happened was it broke and tested the VWAP line, so it went all the way down and found support there. It bounced off of that, but then failed again at the top of this trend line. Now I was waiting for this to completely break through. And what we got was, magically just a few minutes later, this candle bar right here, we broke right through the VWAP. So almost a dollar move right through that support line. And at that point, that was my indicator that we broke trend, we're in a downtrending market, and we broke through the VWAP. So now I was ready to start buying some put options. So as you can see right on this green line here, I started to scale into my put options, which I'll pop up on the screen right here. And I continued to hold that contract as we downtrended till around 12:45, 1 o'clock. And the reason I was comfortable continuing to hold this was because if you look, we made lower highs every single time we tried to bounce higher. So if we drew a trend line here, if I go to trend line, you can see that here we made a lower high, and we just continued to trend down as the market started to sell off. And so that I was happy to continue holding that down. Now, I started to sell it over here because we had a major sell-off, really quick, exaggerated move, and I wanted to take some profits, and that's what I did right there. So the next trade I took was these 3 buys right here, so 1, 2, 3. Now I know I said, don't buy options maybe after hours or into the next day, but at this point I was up a few $1,000s on this previous trade, and I was okay, scaling down the size, just taking a few contracts and seeing if I could take advantage of any after hours move down or any futures breakdown. So I went ahead and I bought these. The market was continuing to downtrend, which I was comfortable. That's why I was comfortable again buying these puts. We saw that the whole day the market sort of was trending down. And so that's why I executed on some puts here. Now, if we go to the next day, which is, Friday. So let me go ahead and zoom out of this right here. So if we go into Friday, this is the after hours between Thursday and Friday. Now, as you can see, the market just totally tanked during the futures and in the after hours. So I was up, a comfortable amount the next Friday, which ended up being great that I took some of these contracts Thursday afternoon. Now, what I did was, I saw the market was trending near the VWAP at the beginning of the morning, and then did make a higher high and started to break through. Now, I will admit I did probably panic sell a little bit too early here. I was selling as we were starting to trend up, and I was just up so much that I just wanted to take some profits. But, if I look back and do some, hindsight trading, I do see that, if we scaled back out, this high was never any higher than this support here. So I probably should have looked left. It's always great to look left on the chart, and saw that, this was a good resistance point around this 298 area. And I maybe should have held this until, we broke that 298. And what you can see is we did not, and we fell again. So I could have probably made some more money on this trade, but overall was happy, with the profits that I had. So guys, the next trade that I had was Royal Caribbean. What you guys can see, this is Thursday and this is Friday. Now on Thursday, we had a pretty big sell-off and continued to sell off throughout the day. I did miss that trade, but I was looking to see if I can take advantage of it on Friday. So, if we look at the Thursday chart, we can see that there was some resistance here. So if we go ahead and draw this line, this is around $70 a share. So we found that there was some resistance here, and the stock just sold off from that point. Now, if you look at what happened Friday, I was looking to see how the stock reacted on Friday to that $70 range. So if we zoom into Friday, we can see that the stock, basically touched that $70 point and just sold off from that point. So we hit that 70, we failed, we made lower highs, and we just continued to sell off. So at that point, I was comfortable executing my put options on Royal Caribbean there. I'll go ahead and pop up the confirmation on the screen. And after entering that trade, I was just watching to make sure that we didn't break through and make higher highs. So I was looking to see if we were gonna make a higher high after the 69.55 area. So if you draw a trend line or draw a price line there, I was watching that line as my stop in this trade. So what happened was we actually never reached that, and I was just holding through this continued downtrend. And then we got a huge downtrend here. I was up a good, I think 40-50% at that point. And as I saw us start to uptrend, which is making higher lows. So as you guys can see here, we began to uptrend in this market. that's when I went ahead and I got out of my position. Now, in hindsight, you know, we did fail the VWAP again. So this is another good example of where the stock hits that VWAP and then sort of drops down. So I'll go ahead and put an oval there. So you can see that we hit that VWAP line and sold off again. Now, in hindsight, I probably sort of panic sold in this one and just sort of got out maybe a little too early. But at this point, I was happy with my profits and got out of the trade. So guys, if you're interested in getting the VWAP on your chart on TD Ameritrade, go ahead and go up to this studies right here and just type in VWAP, and there it is right there. All right guys, so I hope you enjoyed me breaking down the trades a little bit more for you in this video. I wanna make sure that I'm educating you and not just sort of showing you my trades and my profits. So if you guys appreciate that, go ahead and smash the like button. That would really help me out. Now also, if you guys want to watch my trades as they unfold, I have a StockTwits account that I trade, you know, intraday, as well as a trading options room on StockTwits that I post in. We have, I think, over 40 or 50 members in there now, so it's growing pretty quickly. If you want to go ahead and join that, I'll go ahead and pop it up on the screen, as well as put the link down in the description below. Now again guys, if you enjoyed today's video, smash the like button, subscribe to the channel, and I hope to see you in the next one. Peace.